Let's get another check on the markets today. Stocks closing in the green as investors await tomorrow's big PPI inflation data. The Dow jumping more than 180 points. The S&P climbing 0.75%, also snapping a 5-day losing streak. And the tech-heavier NASDAQ leading the gains, climbing more than 1%. Oil, by the way, finishing lower for the day. Crude and world benchmark Brent hitting their lowest levels in nearly a year. And there's more action in the after hours right now. Broadcom jumping after beating estimates for the quarter. The company also resuming its stock buyback and upping its dividend by 12%. Those shares up nearly 3.5% right now. And then DocuSign with a big move, shares surging, though off its highs of the aftermarket after earnings and revenues beat expectations. The company also saying sales could come in above expectations for the current quarter. DocuSign shares up 8% right now. Now, Tesla is hitting the brakes as of late. Shares falling this morning on reports its Shanghai plant would cut shifts and delay hiring as well. The stock recently clawing back some losses, but over the last 3 months, it's down 40%. For more, let's bring in Loup Ventures Gene Munster, a man we'd often turn to for talk on Tesla. I think maybe, Gene, we'll start off with a broader question. Has Tesla now fallen by enough to make it attractive?
Yes, I think it has. It's not investment advice. It is just my view that this is an opportunity, I think, for the long haul. And Dom, I would kind of paint this frame the picture of what's happened here. Is it's been a vortex around reports today from Bloomberg about production cuts in China, about how much Elon's time is being spent with Twitter, and that's being a distraction. And I think what is being, missed here is what some of the facts are. And this comes to the opportunity here. And I'll start with some of the near term. And I'm reluctant to use the word facts because many that is often disputed. But we do know that Tesla is discounting in China and they're discounting in the U.S. And in China, Tesla's deliveries for the month of October, they report this, the China Passenger Car Association reports these numbers. These are hard numbers. Was up 32%. It was up 90%, the numbers that came out today. People looked past it because of the other broader headlines with the Bloomberg story. But that compares to the broader numbers in China being down 6% for the month of November. So China, Tesla's gaining share. So, Dom, I think these concerns that we've seen more recently, I think are largely overblown. I actually think that the delivery numbers are going to be okay. And longer term, I think Tesla sets up in a good position relative to other car makers.
Gene, when you say over the long term, that there's a certain amount of patience some investors will have for this to play out. And I would say that it doesn't seem that there's been as much rumbling from the Tesla shareholder base because of the halving of market value over the course of 2022. How much time do you think investors will give them for this thesis of market superiority to play out? Well,
you probably lose a quarter of them if they don't deliver on what will be the expectations for the December quarter, because, of course, they had a slight miss in September, and they talked about some logistics that have pushed those deliveries into December. So it's a little bit of a show-me story. So to answer your question is that if I'm wrong and deliveries do show some softness, I think that you're going to see an exodus from at least part of this base. I think you will see people continue to believe in this for the long term because there's other forces in play like what's going on with China and production. But this would be a pretty big negative if they ended up missing. I don't think it's going to happen. And maybe said a different way is, what is it going to take to regain some confidence? I think a December delivery number that shows that total deliveries for the year are 1.4 million or greater. That's the bogey. I think will relieve people considerably and get, I think, would be a positive catalyst for the stock.
So, Gene, you're talking about fundamentals for the company of Tesla. The stock has obviously been very weak, down 20% or so over the last, month and change. And, it's really, underperforming many of its auto peers here. But there's something else going on, right? And so is it also, is this shareholders voting on the job that they think Elon Musk is doing? Because he's been very preoccupied with the situation with Twitter. And, the story that I thought was just as important as the production issue in China is that the bankers that gave him the $13 $14 billion nearly in debt to buy Twitter, are suggesting that maybe they're going to kind of reformulate that with some margin loans against his Tesla stock. And I really feel like, again, if he were to miss Q4, the fundamentals get worse. If there's a global recession here and the stock continues to go lower and he's pledged over 100 million of his shares, doesn't that create a really difficult scenario if there are margin calls for Tesla shareholders?
Absolutely. The ledger you just printed out or listed out there, that's on the negative side. And I would kind of come back to, if the numbers are good, if the delivery numbers are good for the December quarter, everything that we just talked about there probably doesn't matter as much. And I think it really comes down to that. It's the view that Elon is being distracted. These production numbers, I don't know if they've been cut. Tesla says that they refer to it as fake news today. Who knows? But to answer your question is that ultimately all that is anticipation. The substance of this all comes down to, are they going to deliver the cars? And if they do that, the stock goes up. If they don't, it goes down.
Hey, Gene, it's Tim. I've always been frustrated by everyone looking way far out, and in terms of Tesla, and trying to impute a valuation based upon growth that will be there. I'm not being critical of you on that. I would like, though, for you to focus on the current macro around the auto sector. I'm actually not that worried about China production at all. In fact, I think some of the issues in China, if you look at the SARS numbers, they've come in dramatically. Auto demand is just coming down globally. I worry about the cyclicality of a car company. I think it's a car company. Talk about that.
Well, I see it different. I think that replacing a gas for an electric motor is I think it does change the equation. And I think what Tesla has shown is that by bringing together hardware and software, it does create more value, and that's why I think that they've done well in the car market and the EV market. So I think the margins that they've delivered have been more tech-like. They're not true tech, but they're better than traditional car companies, and I think that would be some evidence that it's more than just a car company. And I agree with you. I've been guilty of looking out 5 years and talking about where Tesla is 5 years. And just, if I may, I think in 2 years it will prove to be some upside here.
All right. Gene Munster on the Tesla trade. Thanks very much. We appreciate it. Guy Adami, yes, I'll throw it to you. I mean, you heard the questions, you heard the commentary. Is Tesla a stock that you want to own right now?
No, I don't think so. It's not trading well. I mean, it's actually technically doing everything you want to see it do if you're bearish or short the name. I mean, the move down to 167, the subsequent move basically up to 200, failed there, making another run at the lows. Support in this stock is somewhere between 145 and 150. And if the tape rolls over, like I think it may from these levels, I think that's where Tesla is going.